Skeena Resources has 4 projects in the Golden Triangle of Northwest British Columbia. I'm sure you're all very familiar with maps like this. The Golden Triangle is a very hot spot right now. And in all the maps like this, you're always going to see SNIP and ESKAY Creek, which are some of the 2 most famous past-producing mines in the Golden Triangle and in Canada. And Skeena has both SNIP and ESKAY Creek. So we own SNIP outright 100%. We acquired that from Barrick in July of last year. And ESKAY Creek, we signed an option to acquire 100% interest just in December of this past year. We have 2 other projects in the Golden Triangle, Porter, Idaho, and Spectrum GJ. But those aren't our focus anymore. We've quickly learned as we've been raising money, and we were like what we're seeing at SNIP and ESKAY, that's going to be our focus. So we signed an LOI with a company called StrikePoint to sell Porter, Idaho outright. That was just announced last month. And we have a number of groups looking at GJ, which is our copper gold porphyry project that has a PEA. So the focus of this talk will be SNIP and ESKAY Creek. So both past producers, SNIP shut down in '99, ESKAY Creek shut down in 2008. There have been major changes in infrastructure in this area since when these mines were in production. SNIP was a fly-in, fly-out operation, all diesel-powered. Both were all diesel-powered. For SNIP, they flew the concentrate out in the winter months and used a hovercraft in the summer months, if you can believe it. So it was a very high-cost operation. For ESKAY Creek, there was a road to site, but it was all diesel-powered as well. So major changes in infrastructure. You've got Highway 37 and the Northwest Transmission Line that goes all the way up to Red Chris. We also have 3 hydroelectric facilities that just so happen to be built within the last 3 years right in the middle of SNIP and ESKAY Creek. So for ESKAY Creek, it's about 7 kilometers away by road to the nearest hydroelectric facility, and for SNIP, it's about 17 kilometers. And we're looking to build a road from that hydroelectric facility out to SNIP. Seabridge has the ground around us, so we're looking to share the cost on that road, and permitting is well underway. So major changes in infrastructure, which makes these projects much more attractive now than when they shut down. So we're going to start with SNIP. As I mentioned, we acquired it 100% outright from Barrick in July. It produced 1.1 million ounces at a staggering 27.5 grams per ton. We inherited over 280,000 meters of data, 8,400 meters of usable underground workings. We've drilled almost 16,000 meters to date, and we're right in the middle of an 11,000 meter phase 2 underground drill program. We released results from the first 8 holes just a few weeks ago, so lots of news coming out on SNIP. So this image is to show what's been mined and what we think is left, and then I want to run you through some cross sections to show the potential that we see. So everything that you see here in gold is what's stoped out. Everything that you see in blue is all the mineralization left behind in the ground today that's greater than 5 grams per ton over 2 meters. So when the mine was in operation, the cutoff grade started at 12 grams per ton and rose all the way to 24 grams per ton by the time the mine closed. And that's because the price of gold was dropping, so the cutoff grade needed to go up. So we are coming back in and we're looking what we could do with a 5 gram per ton cutoff. So there's an amazing amount of mineralization left behind that was below that 24 gram per ton cutoff that existed. So I'm just going to run you through 2 cross sections here. So our drill program that we're doing right now is twofold. We're drilling from the underground drifts there that you can see off to the right of the page. We're doing what we call infill drilling because it's areas of known mineralization where there was some historic drill holes, but the mineralization was below that cutoff. And then we're also doing more step-out and exploratory drilling. So I'm going to take you through the first section there, which is on the left side, 4660. On the left-hand side there, it shows you the areas that were stoped out. That's the twin zone that produced over 700,000 ounces at about 28 grams per ton, so extremely high grade. Some of our more exploratory drilling that we're doing this summer is looking for an area that would be similar to the twin zone, so it would basically be the other side of the shear zone. And we have good indications that we're looking for something that's quite equivalent to the twin zone. We did a surface drill program in 2016, and we tapped into a surface drill hole, I think I've highlighted here, yeah, that's 16.2 grams per ton gold over 13.5 meters. And sure enough, when we went through all the historic data, we were able to see just a small cluster of historic drill holes in that area that also had some grade. So this has got us a bit excited that there could be an area that's geologically similar to the twin zone. So that's one of the targets that we're looking at. That's what we're calling the 200-foot wall because it's 200 meters into the footwall. And then aside from that, I'm going to take you through another cross-section. So this is off further to the east. This is some of the infill drilling that we've done. So I mentioned that we released drill results from the first 8 drill holes. And these are results we actually released earlier in the year, just to give you an idea of some of the grades that we're hitting on the infill drilling. 91 grams over 3.8 meters, 35 grams over 4.35 meters, 19 grams over 11 meters. So we're quickly seeing that we're able to extend the mineralization and that it's contiguous. So we're filling in the gaps, and that's why we're calling it infill drilling. So lots of results to come out on SNIP. I think after the underground program, we're probably going to do a bit of a surface program this summer. We have lots of exploration targets that'd be better reached from surface, so there's a lot of potential left on the project as a whole. Surprisingly, it's never really been systematically explored, and that's because the cutoff grade, again, was so high when it was in production. So lots of good news out of SNIP to come. Next, I want to cover ESKAY Creek. We signed an option with Barrick to acquire this in December 2017. ESKAY Creek was the highest grade gold producer in the world when it was in production and 5th highest grade silver producer. It produced 3.3 million ounces at a staggering 45 grams per ton and 160 million ounces of silver at over 2,000 grams per ton. So ESKAY Creek is unique because it had both direct shipping ore and mill feed. It's a VMS deposit, and the cutoff grade for the mill ore was 12 to 15 grams per ton, and the cutoff grade for the direct shipping ore was a staggering 30 grams per ton. So again, we're going to be going back here and looking at all the material that was left behind that was below that cutoff grade. As with as with SNIP, we inherited an amazing amount of data. With ESKAY Creek, we inherited over 700,000 meters of assay data. We're actually in the process of modeling up that information right now to put out a maiden resource for ESKAY Creek in the fall. So we get a lot of comments from newsletter writers and et cetera that they think everything was all mined out at ESKAY Creek. So we did this internally. We did a bit of a scoping study to see, well, is it really all mined out or is the material that's left behind? So what you're looking at here is the underground workings. 21B zone was the bonanza zone. That's where the majority of the mining came from. There was also the 21A zone, which is on the far right of your page. That's where the first drill hole went into the ground, but they never mined that area. And the reason that we knew this and that Skeena wanted to acquire this project is because we've got a number of geologists on our board, and both our chief geologist and our chairman worked at ESKAY Creek. Ron Nedelitsky is accredited with the discovery of ESKAY Creek. Ron Nichols, I always say he should be accredited with the discovery of SNIP because he put the first drill hole into the ground, but there you go. So we have an amazing amount of knowledge in our office, and they knew that the first drill hole went into the 21A zone, but it was never mined. So what you're looking at here is the 21C zone, which is just below that. This, in 2005, is when the decision to shut the mine down would have been made. In 2005, you needed a 15 gram per ton cutoff to meet a 20 gram per ton head grade for the mill. So as you can see, there's a little bit of patchy gold spots left behind. That's using a 15 gram per ton cutoff. So let's fast forward to 2018. If we use a 3 gram per ton gold equivalent cutoff, you can see there's an amazing amount of material left behind. So the thesis here is the same as SNIP. What's left behind that wasn't economic at the time, but now due to the price of gold and improvements in infrastructure is now economic. So this is an overview of the whole project. Again, we've modeled up all the material left behind that's greater than that 3 gram per ton gold equivalent cutoff. That's what we think would be economic. And I'm going to take you through just one quick cross section here to give you an idea of the material that's left behind in the ground right now, where we're going to be targeting our initial surface drill program this summer. So I'm going to take you through the 21A zone. So this is near surface, could potentially be amenable to open pit mining. What you see there is a 1 gram per ton gold indicator shell in gold, and I know it's hard to read, so I just picked out some highlights here. 63 grams per ton over 34 meters, 55 grams per ton over 24 meters, 42 grams per ton over 28 meters, 31 grams per ton over 27 meters. So these are holes that were drilled back in the 2000s, and this was sub-economic at the time to be mineable. So this is the 21A zone that was never mined. But in most places, it's drilled down almost to 10-meter centers. So this is what we're modeling up right now, the material that's left behind, and we'll have an initial 5,000-meter surface drill program at ESKAY Creek this summer, where we'll be able to replicate results like this, because it's sitting in the ground right now. So just to quickly recap, 11,000 meters underground drilling at SNIP is underway. We'll probably have a surface drill program there later in the summer, and then we'll be modeling up an initial resource probably Q1 of 2019. For ESKAY Creek, we're going to do an initial 5,000 meters surface drill program. We have all the core from ESKAY Creek, so we can model up a resource, which we're doing as we speak, and we hope to get a maiden resource out by the fall or end of the year 2018 this year. So just quickly, the capital structure. I know as Jay was saying, this looks like a pretty common stock chart for junior mining companies these days. We think we're undervalued. We're going to have some spectacular drill results coming out from both SNIP and ESKAY Creek this summer. And please come to the Q&A session afterwards if you have any more questions. Thank you.